He predicted the crash in 1987 and made hundreds of millions on it, while Wall Street panicked. His name is Paul Tudor Jones, and today I'm going to tell you the secret of his strategy that is still working in the market today. This won't be a retelling of a biography, it's a practical breakdown that could influence your trading style. So, who was he? And why should every trader know the name? Paul Tudor Jones is a Wall Street legend. He is the founder of Tudor Investment Corporation, a fund that has consistently outperformed the market for decades. He didn't just make a fortune, he formed an entire trading philosophy, aggressive, systematic, and ruthlessly rational. He trades with a hunter's instinct, but he has always emphasized, you can't control the market. The only thing you control is the size of your loss. He was one of the first to combine technical analysis with a macroeconomic view of the market. It's an approach that is still used today by the largest hedge funds in the world. And if you want to learn not just how to enter the market, but to understand when it is time to run away, you should definitely study how Paul Tudor Jones thinks. And now, let's move on to the most high-profile moment of his career. How he saw what no one else saw. How he predicted the 1987 crash and became a billionaire when others were losing everything. October 1987. The market is at its peak. Everyone's feeling euphoric. But Jones is one of the few who looks at the charts and feels, something's not right here. He notices a repeating pattern similar to the market's behavior in 1929 before the Great Depression. The same overheated prices, the same speculative activity. He and his team model market behavior based on historical data and come to a conclusion. A crash is inevitable. He bet everything on a fall. It wasn't just a risk. It was a bet against all of Wall Street. And on October 19th, the very day that would later be called Black Monday, the Dow Jones Index falls more than 22% in a single day, the largest daily drop in U.S. history. While investors lose billions, Paul Tudor Jones makes hundreds of millions of dollars in just a few hours. It was his finest hour. But more importantly, it was a victory of strategy over emotion. He didn't guess, he analyzed, he prepared, he didn't hope, he acted. And it was this approach, cold-blooded, structural, risk-controlled, that became his trading philosophy. After the 1987 crash, Jones became a living legend. But it wasn't just one successful trade behind that success. It was the result of his strategy, which he honed over the years. And now let's analyze it. What is its essence, and what can we take from it for ourselves? Paul Tudor Jones was not a pure techie or fundamentalist. He did not lock himself into one system. His approach was a combination of trend trading and counter-trend trading, depending on the phase of the market. He used to say, the best trades are the ones that are truly scary. What does that mean? It's not just a pretty aphorism, it's about psychology. He entered the market not when it was comfortable, but when the risk was justified and the market gave a strong signal, even if it went against the emotions of the majority. He actively used technical analysis, patterns, waves, levels, impulses. But at the same time, he attached great importance to context, what the market as a whole was doing, how other assets were behaving, and most importantly, how the crowd was feeling. He wasn't looking for the perfect entry point. He took a broader view, where there was panic, where there was greed, where there was overheating, and was proactive. His strategy was flexible but disciplined. He could enter against the trend, but only if he saw a strong possibility of a reversal. He could hold a position against the trend, but only until the market showed signs of exhaustion. That's why his approach is still relevant today. He teaches not to guess, but to observe, not to hope, but to react to signals, and remain disciplined. So now you got the way he thinks, the way he sees the market. But there is one thing that makes Paul Tudor Jones different from most traders. And it helped him not just to make money once, but to systematically build up his capital for decades. Paul said, I'm a trader, not a forecaster. My job is to stay in the game. And that's the key. Because even if you have the coolest strategy, if you don't know how to manage risk, you're going to lose sooner or later. His approach was rigid and clear. He never put all capital at risk. He limited losses per trade to 1% to 2% of the deposit, no more. He would exit a position immediately if he felt that the idea wasn't working, even if the market hadn't turned yet. He would say, if I'm losing money, it means I'm doing something wrong, and I'd better cash out and think about it. He wasn't afraid to be out of the market. He wasn't afraid to miss a move, because he understood the main thing is not to guess, but to preserve capital to do it again and again. Paul Tudor Jones was not only a hunter of profitable trades, but also a master of survival in the financial market. And that's his real secret. I don't want you to just listen to this and forget it. I want you to stop and really think about it. How much risk are you really taking on each trade? Do you have clear exit rules? Or are you still hoping the market will turn around? You may know hundreds of strategies. You can understand candlesticks, levels, and news. But if you don't know how to manage risk, you're just playing the lottery. Every time you open a trade without a plan, you're giving money to the market. Every time you move a stop in the hope that it will bounce, you are trading on emotion. Every time you enter a lot too big, you are not a trader, you are a player. And the market is not about luck, it's about discipline. Paul Tudor Jones once said, "The most important thing in trading is to protect your capital, not to increase it, protect it." While most traders are hunting for the dream trade, smart traders are hunting for stability. And that's what makes the difference between someone who watches motivational videos and someone who one day becomes a legend himself. It's up to you to decide what kind of trader you become. But if you choose the path of discipline and system, you are one step closer to those who do not just trade. You're a step closer to someone who wins. This approach makes Paul Tudor Jones a true legend. But let's be honest, it's not easy to maintain discipline, not to give in to emotions, and to take risks every day, especially when the market is under pressure. That's why if you want to automate your trading and remove the emotional component, you can use the MiloBot PRO Expert Advisor. This is a fully automated system created on the basis of the author's strategy, which was tested on real accounts of the developers with a deposit of more than $100,000. Take a look at one of these accounts. Over the last 4 years, MiloBot PRO has increased its deposit from $34,000 to $272,000. And all statistics are available on the independent resource, My FX Book. If you want to test the Expert Advisor without risk, download the demo version and check how it works on history. And if you are ready to use it in real trading, you can purchase the full version on the MQL5 website. All links can be found in the description below this video. If the video was useful, please support it with a like and subscribe to the channel. There will be more strategies, analysis, and real stories of traders who win not by luck, but by systematic approach.